You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you very much, Shelby.
Dan, today you have some positive news to share with us when it comes to the futures.
Well, for grain futures, especially for corn and for soybeans, we've seen moves to the higher side. For wheat, it's been basically a little bit of a move also. So we'll talk about that. But you see on yesterday's markets, again, Thursday, January the 23rd, we saw corn close. The March contract closed at 489 and three quarters for the day is up about 5.5 cents. And the new crop contract D's 24 at 464 and a quarter, up also about just under 5 cents. And that move in the futures market, basically, when you look at specifically the lead contract right now, March 25, we had been trading as low as about 412, 413 thereabouts, and now, of course, we're up to just under 490, or we were yesterday. So 80 some cents. You're approaching recent highs in that contract that happened basically back in April of last year when we got as high as basically 508, 509, something like that. So been a pretty good run, really. And when you wonder about the issues at hand, why is that happening? Well, that on the one hand, um, you have some crop concerns emerging down in South America, particularly in parts of Argentina, that could affect their crop, and also rains delaying the harvest of soybeans down there, which, given their normal pattern of planting their second largest crop of corn after soybeans are done, well, that's a big deal. Pushes that second crop later, and we have had some decent export numbers, ethanol, other feed use seeming to hold up pretty well, following on the heels of the January 10th USDA supply demand report for corn, which dropped stocks down to 1.54 billion bushels and stocks to use basically a 10. So you've got some positive things going on in that, and the positivity has affected soybeans to a degree also. Here we had been trading as low as about 945 or so, again back in about mid-December, now jumped up to 1065, so over $1 higher for beans from where we had been. That uh, when you look at the March contract, you're almost getting up to a recent high that well, it's fairly recent, back in October, of about $11. So here we're at 1065, and a cup. If we continue to move higher, well, you're starting to get to areas of for that contract anyway, of historic highs. Probably the highest price, at least we see chart wise, in the last year or so, was up to about $12.30. So we're still a ways from that, but overall, you've got that happening, and exports still holding up decently, with some concerns uh, about what will happen in the South America crop in Brazil. You've got the official trade group saying, "Oh, record highs, going higher than we've ever seen," and but yet you do see some weather issues. And when you look at the weather maps for South America, that as you pull them up and look at them, there's some really it's really spotty and mixed. So uh, again, I think for any of these groups, if you ask people in the U.S. what will be the size of the crop, oh, it's going to be great until proven otherwise, and that's basically human nature. And for wheat, saw wheat close. The Kansas hardwood winter wheat contract that trades on the CME closed at 570 and three quarters yesterday, and that we have seen of late up to more like 580, 575, 580. So have been higher than that just this most recent week. The lows that we've seen here in the last month or so were down to about 535, 540. So we've seen some gains there also. If anything, probably the gains happening on the wheat side of the ledger are almost in sympathy to what's happening in corn and the other commodities, it seems. So certainly not completely bearish news. If anything, I think the overall tenor of the market is that, gosh, we really anticipated large overburdening supplies in the latter part of last year, and that narrative of really no worries about adequacy of what a buyer would want to obtain is carried over into the first part of had carried over into the first part of 2025, and now we've got a few issues at hand and are starting to see a little bit more of a positive outlook for where prices might go.
What are we seeing for cash prices?
That's where the in the cash market, that's where the real I guess conundrums, excitement, or questions are really occurring. When you look at uh, where cash corn has gone here in Western Kansas, we've had a lot of discussion of late at some meetings and such about how even though the futures have moved higher for corn, the basis is weakened, and you really see that in the Garden City area. Again, our bellwether market, 20 over basis, and generally, gosh, that's a positive basis, but quite often we're 45, 50, 60 over, and the best of years, a dollar plus. But you've got that happening. I think there's two factors at play, at least as I understand it, what farmers have told me and what the prices seem to be showing here in that in Western Kansas. Apparently, we've seen a lot of grain that had moved last fall. We did get up to about 430 or so for corn in the last month or so there, and after being so low in August September, that increase was rewarded by farmers with a lot of cash sales, and uh, so with all that occurring, you've seen the weakness of basis that was happening at the end of 2024 carry right over into early 2025. And I look at basis levels in for corn and say the Colby, Salina, Topeka area, you've got really the lowest basis that we've seen in the last three years occurring now, but that low basis again, but that low basis basically is matching where we came out of the end of last year in. So uh, and where that comes in farmers' viewpoint is that if they're amongst those that haven't sold their grain yet and they're going into these markets looking for places to sell, they're getting the message that, hey, we're bought up for the first quarter on into that second quarter of 2024. At least that's what's happening out to the west. So we'll see. The other issue out here to the west is that with the increase, basically futures driven increase in corn prices, we're seeing corn outracing wheat to the high side. So now you've got wheat price is about equal to corn in some cases. Well, yesterday, the highest cash corn price in the Garden City region area was $5.10. The highest wheat price is 5.06. So so you've got a situation where we're starting to at least consider economically feeding wheat, and so that's another factor, along with early sales that probably tending to weaken the basis of feed grains out to the west. When I look around the rest of the state, you see the for corn in particular, the strongest basis bid is competitively speaking, is down in Pittsburgh area, 11 cents under for corn. Again, Hutchinson 15 under, the best bid. Colby 15 under, and then you've got Salina 26 under, and Topeka 31 under. And sorghum bids, again trailing corn, at least with weaker exports right now. Best bid in the state, best area is at Topeka with 45 under, and then Salina at 56 under, and the like. I guess Hutchinson about 51 under. So anyway, you got that happening, and we have seen with soybeans moving a little bit to the higher side, that you have a couple bids now, and the highest bid in the Topeka and the Pittsburgh area, both just looking over $10, basically at 10.05, and that we haven't been there for a while, so that's a big thing. And wheat kind of varies. It's interesting. You've got highest bid in the state for cash, Hutchinson at 21 under at $5.50 yesterday, and Salina at Topeka areas both at 5.40. But then you go farther out to the west again, Garden City 5.06, like we'd said, and the Colby area 4.96. So anyway, you've got all that happening, and if there's anything that's out of the ordinary for right now, it's that the wheat price is low enough out in these western areas where we have feedlots that hey, we're considering feeding it.
And Dan, something else when we talk about the gray market that you've been hearing a lot of questions around trade policy.
Yeah. The the rally we had earlier this week on the day after the inauguration, which would have been the 21st, suddenly the gray markets had jumped up. Well, that you go back and read the commentary. Well, what happened? Well, the statement was well that the new administration, when it came in, didn't immediately slap 60% tariffs on grains. So there was a relief of that. It sounded like there's more of a uh, I wouldn't say conciliatory tone, but more of a working through how best to approach this situation. It sounds like now from news releases, not well, news articles from interviews, nothing official. That it sounds like that February 1st will be the time when, if there are tariffs placed on these countries that the U.S. trades with, that they'll be announced at that time. And the main ones that I've seen discussed, of course, are China and here in North America, both Mexico and Canada, and also the EU being discussed. When you dig into the details to see what for grains, what the effective tariffs are for that China has right now for grains coming in, basically they're they've waived higher tariffs from 25 to 30%. They're not charging them at this point. They've been charging basically what are allowed for most favored nation status, which are like three, like for corn, 1%, for soybeans, about three, I think. And then for soybean meal and oil, about six or nine. So we haven't seen a 65 percent tariff on corn yeah, now that's a tool that the Chinese could use in a trade uh, uh, conflict, but they haven't yet. So we'll see. So what that does, it puts us in the mode of looking towards February the 1st and days around that. The next time when surprises could come into the market, and probably anybody that has grain to sell, uh, probably I think I'd be wary of that date because we just don't know how markets might react to whatever announcement comes out.
Dan, I appreciate you taking the time to join us once again.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.